If you can't name 7 things you should do before April 5th, this video could save you thousands. I'm Hamid from Wealth Decoders. Every single year, billions of pounds in tax relief go unclaimed, and the clock for the 2026 tax year is ticking right now. Stay with me. This is your complete checklist. By the end of this video, you'll have a crystal clear 7-step action plan. Each step is designed to legally reduce your tax bill for the 2026 tax year. Some of these take just 5 minutes. Others could save you thousands of pounds. I'll give you the exact numbers, the deadlines, and the research behind every single move. Here's the truth. HMRC reported that in the 2023-24 tax year, over £3.5 billion in tax relief went completely unclaimed. The Resolution Foundation found that lower and middle income earners are hit the hardest. They simply don't know what they're entitled to. That ends today. Let's make sure you claim every single penny. Most people don't know this. Dr. Shlomo Benartzi at UCLA studied why people fail to act on finances. His research shows we suffer from present bias. We overvalue today's comfort and ignore future costs. Missing the April 5th deadline feels painless now, but it can cost you thousands in lost allowances. Awareness is the first step to beating this trap. Here's what changed everything for my own finances. Your ISA allowance for the 2026 tax year is £20,000. That's £20,000 of completely tax-free growth. No capital gains tax, no income tax on interest. And here's the kicker. If you don't use it by April 5th, you lose it forever. It does not roll over. Even putting in £100 is better than zero. Let's be real. You might think £20,000 doesn't matter, but HMRC data from 2024 revealed over 4,000 ISA millionaires in the UK. They built those fortunes entirely tax-free. Year after year, they maxed their allowance. Compound interest did the rest. Professor Richard Taylor at the University of Chicago calls this the power of small, consistent actions. Start now, even with what you can afford. Nobody tells you this. Your pension is the most tax-efficient vehicle in the UK. For basic rate taxpayers, every £80 you contribute becomes 100 instantly. Higher rate taxpayers, £60 becomes 100. The annual allowance for the 2026 tax year is £60,000. And if you haven't used previous year's allowances, you can carry forward up to 3 years. That's potentially massive tax relief you're leaving on the table. Imagine this. You only used £30,000 of your £60,000 allowance last year. That unused £30,000 can be carried forward. Over 3 years, that could mean up to £180,000 in total pension contributions, all with tax relief. Check your pension statements now, and coming up, I'll reveal the step that catches HMRC out more than anything else. Here's the truth. HMRC makes mistakes. A 2023 report from the Chartered Institute of Taxation found that 1 in 3 tax codes contains an error. That could mean you're overpaying tax right now and don't even know it. Log into your personal tax account on the HMRC website. Check your tax code matches your actual circumstances. It takes 2 minutes. Some people discover they're owed hundreds, even thousands in refunds. Most people don't know this strategy exists. Your capital gains tax-free allowance for 2026 is just £3,000. That's tiny. But here's the smart move. If you have investments sitting at a loss, you can sell them before April 5th. Those losses offset your gains. This is called tax loss harvesting. Professional fund managers do this every single year. You can reinvest immediately if you want, but lock in the loss for tax purposes first. Let's be real. The capital gains allowance has been slashed dramatically. In 2022, it was £12,300. Now it's just £3,000. That's a 75% reduction in just 4 years. Dr. Arun Advani at the University of Warwick studied this trend. His research shows that without proactive planning, average investors pay significantly more tax each year. The system rewards those who take action. Don't be passive about this. Here's a question. Did you know you can give £3,000 per tax year completely free of inheritance tax? This is your annual exemption. Plus, you can give up to £250 to as many individuals as you like. Small wedding gifts are also exempt if you didn't use last year's £3,000 allowance. You can carry it forward once. That means £6,000 of tax-free gifting right now in the 2026 tax year. Nobody tells you about this hidden gem. If you're married or in a civil partnership, one of you earns under the personal allowance and the other is a basic rate taxpayer, you can transfer up to £1,260 of unused allowance. That saves the higher earner £252 per year in tax, and you can backdate this claim for 4 years. That's potentially over £1,000. Yet HMRC estimates 2.4 million eligible couples haven't claimed. Imagine this. Every pound you give to charity through gift aid is worth £1.25 to that charity. But here's what most people miss. Higher rate taxpayers can claim back an extra 25 pence for every pound donated. If you donated £2,000 this 2026 tax year, you could claim back £500 on your self-assessment. Charitable giving literally pays you back. Review your donations before April 5th. Let's bring it all together. Here are your 7 moves before April 5th, 2026. Max your ISA, top up your pension, check your tax code, harvest capital gains losses, use gift allowances, claim marriage allowance, and boost charitable donations with gift aid. Each one is a legal way to keep more of your hard-earned money. Print this list, screenshot it. Do not let this deadline pass you by. Here's the truth. Most people think tax planning is for the wealthy. It's not. It's for anyone who wants to stop giving money away unnecessarily. Dr. Benartzi's research at UCLA proves that small financial nudges create enormous long-term differences. One ISA contribution today could be worth tens of thousands in 20 years. One pension top-up could save you hundreds right now. The people who win with money are the people who act before deadlines, not after. Let me put this in perspective. If you skip these 7 steps every year for 10 years, the compounding cost is staggering. Lost ISA tax-free growth alone could cost you over £50,000 in missed gains. Unclaimed pension relief could mean tens of thousands more. A wrong tax code draining £200 a year adds up to £2,000 over a decade. Inaction is the most expensive decision you'll ever make. If this video opened your eyes, smash that like button right now. Seriously, Subscribe to Wealth Decoders and hit the bell so you never miss a deadline again. Drop a comment telling me which of these 7 steps you're tackling first. I read every single comment and I will reply. Share this with someone who needs to see it before April 5th. Your future self will thank you. Let's build wealth together. I'll see you in the next one.